Good morning and welcome this morning. There is the opening bell. That means it is time to get started with Trader Talks in today's market. My name is Ben Watson. I'm an education coach and senior manager here at Charles Schwab, and I'm joined out there in the chat by my good friend Barb Armstrong, who otherwise normally would be here in Dallas, Texas with me getting ready for this event, but I know she's got some other travel going on, so I'm glad to have Barb out there in the chat. She's a 20-plus year veteran of the financial markets. The scene behind me is not Dallas. I promise you there are not mountains like that here in Dallas. If I look over my shoulder and out my window, there is a bunch of tall buildings and a bunch of smog and some clouds. But nevertheless, today we are getting ready for our live event this weekend coming up here in Dallas, Friday and Saturday, Technical Analysis and Option Strategies. So I am here teaching from the hotel, so I'm glad to be here with you and helping out. We're going to talk a little bit about what's going on. Boy, I tell you what, if ever there were a time, I know I say this all the time, if ever there were a time to say this is an interesting market, it would certainly be now, because it is certainly an interesting market. Of course, it always is. There's always interest in the market. So I'm glad to have you here with us, whether you're here in the live version or the recorded version. Thanks for being here. Be a part of the conversation. Leave us some comments there in the chat. Give us a follow on X or on LinkedIn. My X handle is @BenWatsonCS. Barb is @BarbArmstrongCS. And if you're in the recorded version, leave us a comment in the comment section. We would love to hear from you. As a matter of fact, I'm going to give you a challenge. If you are in the recorded version, leave us a comment in that comment section so that we can respond to you, so that we know that you're out there watching this in the recorded version. All right, a couple of quick housekeeping items that we need to get to here this morning as we jump into this discussion. Remember that everything that we talk about is simply for illustrative and educational purposes only. It is not a recommendation or any kind of advice. Remember that when we look at individual symbols, those are for illustrative and educational purposes only. Now, when we talk about options, which we may in this particular discussion, not necessarily as a primary discussion, but as perhaps an aside to the conversation, remember that options trading requires attention. It is not suitable for all investors. It has a high level of risk. It requires a certain understanding. If you're going to trade options strategies, make sure you understand the characteristics, risks, and considerations of standardized options before considering any option transaction or in any option strategy. Now, we're going to be using the thinkorswim desktop software platform today. It is a great learning environment. It is not a guarantee of future success. We're going to be specifically using the paperMoney version of that. It is a great place to practice. However, as you move your practice from paper trading to live trading, recognize that there are some differences in the way that live trading works versus paper trading. So just be aware of that. We're going to talk about technical analysis quite a bit today. That's not a guarantee of future success. It is theoretical in nature. And as such, it shouldn't be the only source of investment research. Now, one other thing to think about as we get into this discussion, we're going to talk potentially about some virtual currency derivatives and instruments. Recognize that those have special characteristics and risks. Make sure that you understand that those are digital representations of value. They do not have legal tender status, at least not yet. So we'll talk through that discussion here as we get into the this beginning. So what I'm going to do is I'm going to pop over here to the thinkorswim desktop software platform. We're going to pop up our index grid and take a look at what's going on in the market this morning. As the cash market gets up and running, we talked a little bit yesterday in my index options or trading index options webcast about what the market has been doing. I'm going to zoom in here on the S&P 500 just a little bit and see where we are. So slightly down morning this morning. The futures were down a little bit. The S&P 500 futures were down about 0.2%. The Russell was down about 0.4%. Some of the other news of the day that we've got coming up as we kind of roll through this, the S&P kind of being weighed upon by things like concerns in the fixed income market concerns in perhaps the rotation either into or out of things like defense stocks, not defensive, but defense stocks, and perhaps a little bit of rotation going on in the AI space regarding some concerns perhaps about that AI space maybe facing some slowdowns, a little bit of challenge. And so that's something to pay attention to as we get into this discussion as well. Let's take a look at the NASDAQ. The NASDAQ down about almost close to 0.5% here this morning, kind of squeezing into this range. But this looks like perhaps the potential for a bounce up off of not only this diagonal trend line that I've drawn in there, which is discretionarily drawn, but it is also kind of moving down towards this 50-period moving average, which, to be fair, has kind of turned down just a little bit in the last couple of days. If we kind of zoom in and stretch this out a little bit, you kind of get to see what that 50-period moving average is doing. So that's kind of an intermediate term time frame that would suggest the possibility of a bit of sideways or neutral movement here. We see the RSI kind of rolling off. So the NASDAQ, which has been the primary driver, one of the primary drivers in the market space, has really kind of now ended up in this symmetrical triangle, or maybe even an ascending triangle if you want to think about it, and kind of coming back down into this range. Gary reminding us that the commodity rebalance, and we get to the commodity indexes in the next couple of weeks, may be hurting some metals, but at the same time, there is some with an executive branch pledge to increase military spending. There is some concern in terms of inflation and in terms of those prices. So we'll take a look at some of those metals here in just a minute as we get in this. And then take a look at the Russell 2000. Now, what's interesting is the Russell 2000 was down this morning, now back up just a little bit. And of the three, up a little bit. Now, that would be perhaps suggestive of the fact that the interest rate outlook is changing a little bit. Remember that the Russell 2000, comprised of small caps, typically tend to be reactive to interest rates. So I'm going to pop on here really quickly. I'm just going to type in comparison, C-O-M-P, comparison, and we're going to put on here a comparison, and I'm going to compare the small caps to /10Y, which is the 10-year yield futures instrument. Now, I'm not talking about this as a tradable instrument. I'm using this as a market definition tool. If you are going to trade futures, two things. One, make sure you understand that futures are a highly leveraged product. There is significant risk. They're not suitable for all investors. It takes separate trading authorization. You need to understand the product before you trade it. But two, if you want to understand the product, come to my Trading Futures webcast on Tuesday mornings at Market Open when we talk about trading futures. And we talk about those ideas, and I'll give you some resources if that is something that you want to do. But in this particular case, we are using the 10-year as a market measure. So I'm going to just put this comparison line. What did I do? /10Y. Oh, I forgot to hit enter. Now I'm going to click on OK. Now it's the comparison to the /10Y. And you can see as those interest rates are moving higher, which is interesting, as those interest rates have been moving higher, the 10-year, the Russell 2000 has kind of been moving down. As those have kind of moderated and run into this resistance level, the 10-year, the Russell 2000 has recovered somewhat. But here we have a situation where the 10-year, at least in the short term, is rising, and so are the small caps, which is a bit of correlation divergence. So we'll talk about that in terms of this discussion, in terms of what might be driving the small caps as we kind of start to break some of these things down. Because remember, the small caps not only have some technology, they have about 20% weighting in technology, but they also have some of those companies that are kind of on the ancillary wings, if you will, of the AI space. So we'll talk about what might be driving the Russell 2000 higher here, and might be some of that rotation a little bit. So what I'm going to do now is I'm going to pop over here to my single grid. And this is just the grid that I use, kind of my sandbox for evaluating what's going on. I'm going to leave my 200 period moving average, and I think this is my, what is this one? This is my 50 period moving average in place. And just to kind of give us a trend definition as we look at these. So I'm going to pop around the globe here. We're going to take a look first at the VIX. Actually, I'm going to do the VIX in a separate grid. Let's do the VIX over here in my VIX grid really quickly. We'll pop into the VIX. And here's the VIX relative to the SPX. So SPX down, VIX up just a little bit. Let's look at the VIX by itself. The VIX now at its 30 period moving average in this particular case, right around 1575. In fact, just bleeding up a little bit above that. So despite the fact that the market generally trending higher, there's a little bit more fear here this morning. Now, we saw a unique circumstance yesterday at the market open, and that was VIX up, market up. And when we see the VIX up and the market up, that's generally a short-term bullish indication. That's generally being driven by call buying as opposed to put buying. When the market's moving higher, there's some speculative pressure to the upside. In this particular case, the VIX kind of moving to the downside here, I think, is more related to the fact that here we are, Thursday, first full week of trading in the new year. Thursdays going into Fridays have tended not to be very strong. We're also now kind of past that Santa Claus rally time frame, which didn't really ignite. And so perhaps there's a little bit of fear in the market, certainly with geopolitical risk at play, the VIX moving a little bit higher in response to that. Now, to be fair, this VIX is not spiking, right? We're just seeing that VIX climbing a little bit. It went from about 15 to about the 15.7270 handle here. That is not a spike in the VIX. We're not seeing a spike here. There's no panic. There's no fear. There is some fear, but there's not panic, maybe is the better way to put that. At least not as indicated by the VIX at the moment. Yeah, and you're right, John. The non-farm payroll report, which is, to be fair, going to be one of the first ones that we've seen that is not delayed in the last little while. Number one, and number two, it's going to have some revisions. So that may be playing into this. It's very likely that we may see the VIX higher tomorrow, given that non-farm payroll report could move markets a little bit. But I'll tell you what, there are a lot of things for the market to be concerned about at the moment, and non-farm payroll is certainly one of those, just simply one of those, perhaps, in this discussion. All right, now let's pop back over here to our single grid, and let's take a look at a couple of these other spaces here. The first one I'm going to look at is /CL. Let's take a look at the energy space. So crude oil is kind of right back down on this diagonal downtrend line. And that is the idea that maybe there's a little bit of upward pressure here. We've seen some downward pressure, to be sure, in the market recently. And that is something that is kind of coming to the forefront here. We've seen, obviously, from geopolitical pressures, some downward push in oil prices, now starting to see a little bit of an upward tick, staying kind of well within this range in terms of the trend that it has been in at the moment. But 50 period moving average still down, 200 period moving average still down. If we take a look at some of the other products, /HO, this is heating oil. Heating oil seeing a little bit of a tick higher here, /RB, which is gasoline. Gasoline seeing a pretty good tick higher here. Lower gasoline prices tend to bring higher demand, and so we typically tend to see that oscillate back and forth a little bit. That higher demand perhaps brought by the anticipation that maybe there's going to be lower prices in the future. So this may be a little bit of that backwardation. By the way, if you want to know a little bit more about backwardation and some of the forces at work here in these futures products, check out my futures trading webcast on Tuesday mornings. Let's take a look at a couple of those other products. /GC. This is the gold futures, and starting to see that little bit of a pullback, kind of making perhaps a little bit of a symmetrical triangle squeeze here, squeezing into this range. Now, what I think is perhaps buoying this up a little bit is that anticipation of the executive branch increasing defense spending, which has certainly, so the pledge was to increase the military budget by about 50%. Part of that was, I think, to backstop some of the defense stocks that were seeing some impact from other executive branch statements. And so when there's a pledge to increase spending in a significant portion of the US budget by 50%, that creates the specter of inflation, right? And perhaps increasing the deficit. That typically tends to be bullish for gold. So I think perhaps we would see gold a little bit more bearish at this particular point had there not been that, because gold tends to be, doesn't always, but gold tends to be that safe haven in the potential circumstance of increase in national debt, those types of things. All right, so let's talk about /SI, the one that everybody's been talking about. You're starting to see silver coming off. So this is maybe a little bit better indication of that, right? So silver typically isn't the inflation hedge that gold is. So if there is that possibility of that rebalance in terms of commodity in the commodity space and the commodity index, starting to see this come off of that high a little bit and pulling back. Nevertheless, higher low in silver. 50-period moving average, 200-period moving average, still both moving solidly higher here. The key would be perhaps establishing a level of support that would maybe look for this move to happen to the downside, to break down through this range. A couple of other things, /HG, which is the copper futures. Copper futures also doing the same thing, talking about metals. Copper futures, which had been on a significant tear, simply moving to the downside. Nevertheless, I think if you look at the overall trends, you look at the 200-period moving average, the 50-period moving average, those are both moving in an upside trend. Whether this pullback continues or not, that becomes the challenge. If we were to draw a line in here, that becomes kind of that level of perhaps diagonal support. And if it breaks down through that diagonal support, then perhaps looking for a horizontal support level that may give an indication of a trend change in that break below that support level. By the way, if as we talk about these things like trend, support and resistance, moving averages, momentum, those types of things, those are all things that we discuss in our Trader Talks webcasts. If you want to learn a little bit more about that, getting started with technical. I'm just going to type in getting started with technical. There's getting started with technical analysis. Barb Armstrong, my good friend, who's out there in the chat right now, teaches that ongoing series of webcasts, the getting started with technical analysis lessons. If you are interested in that, that's a great way to get started with this. As a matter of fact, you can see the whole playlist right there. It's a repeating cycle. Plus, there are some one-offs in there. I've taught a couple of the one-offs in that discussion. But if you want to learn, you want to come out and learn a little bit more about it, come on out to one of our live events. So I'm on schwab.com/coaching, and I'm on the in-person events section. Here's our Dallas Technical Analysis and Option Strategies workshop tomorrow and Saturday. We're also going to be up in Seattle, well, Bellevue, technically, on the 30th and 31st, doing the same thing. The first day that we spend, Friday, is all about technical analysis. The second day is option strategies. So you learn all of those things in that event. They are free to, they're no cost to you. We feed you breakfast, we feed you lunch. It's a great opportunity to network with other other like-minded traders. So we would love to see you there. This is where you sign up for those. And we've got a whole slate of events coming up. Sacramento's coming up. We've got a market drive event coming up in San Diego. Then we're going to be in Atlanta and then Denver. And then we're going to be back down here in Dallas doing advanced options. And then we're going to be someplace we haven't been since 2017 is Boston. I fell off the stage in the event that we taught in Boston the last time. So I'm hoping not to repeat that. And you're right. technically we will be in Addison, which is not necessarily in Dallas. So good to see. I know that several of you are going to be here. Now, by the way, when you come over here to the Trader Talks webcast page, by all means, click on that subscribe button if you haven't done so already. Give us a quick follow. Now, one other thing I happen to notice out there in the chat as we pop back over here to what's going on is we've got a feedback survey. And the feedback survey is how we make these sessions better for you. If you let us know what you think, and it's really a couple of questions. And as you jump into that, that'd be great. Just give us a quick answer on that feedback survey. We appreciate that. So I'll let Barb answer Wild Goose's question about the market drive versus the workshops. We would love to see you in Bellevue. And let me talk a little bit to Thaya, question about the inflation gold theory. And then we'll also talk about that January effect. Oh, and no San Francisco. We're going to be in Sacramento, which is not San Francisco, but we're also going to be in Santa Clara a little bit later in the year as well. And we're going to be in New York a little bit later. If that's the tri-state area that you're talking about, then we're going to be in New York in just a little while. So over the horizon. Let's take a look real quickly here at gold for just a second, /GC. Here's the idea. Gold typically tends to go higher when there is an expectation of greater inflation or the dollar going down. It tends to be a safe haven. So when there's inflationary pressure, like there is right now on the 10-year going up, and the idea that the government deficit is going to go higher, there is upward pressure on gold. But there's also a rebalance going on as some traders come out of gold because of its recent run-ups. So if gold prices are getting pushed down because of that selling to rebalance, they're also getting lifted because of those inflationary pressures, because there's a rotation typically, not always, into gold to offset as a storehouse of value to offset that inflationary pressure. Because the dollar reacts to inflation, gold typically goes up when there's inflationary pressures, dollar typically goes down when there are inflationary pressures. So that's kind of the relationship there. Now, talking about the idea of the January effect, let's pop this back to the SPX. And we take a look at the SPX. And the idea on the January effect is that post the end of year tax loss harvesting, post the end of year tax rebalancing, selling the profitable winners and maybe selling off some of the losers to harvest those losses, is the idea that January, as investors and traders come back into the market, January typically tends to be relatively bullish. So let's do this. Let's go back to, I'm going to take my time frame here to a weekly chart. Actually, you know what I'm going to do? I'm going to change my time frame entirely. I'm going to make that a monthly chart, and I'm going to go back 20 years on a 20-year monthly basis. And let's kind of see what our Januaries look like. Now, I know we could do a seasonal chart, but let's go to January. So January here was down. This was 07. Let's go into the 09 time frame. There's January of 09. It was a down market. But once the market starts to turn higher, here's January of 11, and it was up. And we go to January of 12, and it was up. January of 13, and it was up. So generally, if the market's in a bull market, typically January tends to be pretty strong. And looking at this on a monthly basis, looking at the SPX on a monthly basis, we don't have a lot of down months. We have a fair number of up months over the course of the last 10 years, the last 20 years. So the likelihood, again, this is, past performance, not a guarantee of future success or future potential. But there was kind of that little bit of a pullback into December, or a sideways moving into December. Now the possibility of some reinvestment into January, ticking back into some of those leaders. Now, this is kind of waffling back and forth. Now, what I want to do really quickly here in the next few minutes that we've been talking about this is I've got some ideas that I want to bring into this discussion. So one of those is this, NVDA. This has kind of been the hyper focus. NVIDIA has been the hyper focus of the chip sector, the AI sector, the mining, the Bitcoin mining sector, all of those things. And as has gone Bitcoin, if we go back and we take a look, let's go back to, let's put this on a longer chart. But what I want to do is do this, COMP comparison. I'm going to put a comparison line on here, just like we did before. And I'm going to make this a comparison to /BTC Bitcoin. And I'm going to click on apply and OK. And I'm actually going to take this out to a longer term chart. So I'm going to change my time frame on this chart. I'm actually going to go out to, we'll keep this on a weekly chart and we'll put this out 10 years. Clicking on OK. And one of the things you can see here is that generally, as has gone Bitcoin, so has gone NVIDIA. Because the chipsets, some of the chipsets that NVIDIA manufactures are uniquely suited for Bitcoin mining. So as there's been demand for Bitcoin mining, that's been lifting the performance of NVIDIA. We look at this on a shorter term chart, 3-year weekly. We can see that those have generally been coupled, that Bitcoin tends to lead. Now, Bitcoin has been moving to the downside. Again, remember, we're not using this as a tradable instrument, not using /BTC as a tradable instrument. We're using it here as a market definition. But Bitcoin has been languishing. Again, back down here around the 90,000 mark on the spot and on the continuous futures contract. And as that has been languishing, so has, to a certain extent, NVIDIA. Now, NVIDIA doesn't just do Bitcoin mining instruments and chips and things like that. You can see that Bitcoin leading a little bit more to the downside. NVIDIA has also been at the center of the AI space. So what I'm going to do is I'm now going to take off of here. I'm going to hide my comparison line. And as I'm hiding that comparison line now, we're going to look at NVIDIA as kind of the center orbit of the AI space because they build the chips. But there are a lot of other things that go into that AI space in terms of the world of AI. So the halo, if you will. So I wanted to take a look at a couple of those. CIEN in the networking space. This is Sienna. And Sienna saw a move to the upside, now kind of ticking back down to the downside. But this has been a strong move. If you look at the percentage gain that this company has made over the course of this last year, that's 427%. From that April low now to the high yesterday, in fact, was that all-time high for Sienna. And that's up around the 261 mark. 427, 428% is a pretty good price improvement over the course of 1 year. Starting to pull back a little bit though, but kind of winding up into this ascending triangle. So there is that potential for a bounce and a move higher here. But that's in the networking space. Somebody's got to connect all of those disparate pieces within the AI space. So in addition to connecting all of those spaces, somebody's got to build the chips or at least design the chips, because NVIDIA is a foundry primarily, and they build and construct those chips, and they do some design, but there are others that design the chips as well. ASML is one that does that chip design. So if we're starting to see some weight on the NASDAQ like we were earlier here, this is one of the reasons why we're starting to see some of that weight on the NASDAQ. Some of these halo stocks are starting to move back to the downside. There's a little bit of rotation out of some of these high flyers. So ASML in the chip design space, seeing a little bit of a move to the downside today. Somebody's got to package all of that AI infrastructure and all of that AI compute and all of the AI power and put it to use. whether it's industrial use, whether it's consumer and retail use. So those are the hyperscalers. That's the Microsoft and the Google and the Amazons of the world. So I wanted to take a look at Amazon here really quickly. And Amazon seeing that upward movement today. And in fact, that little bit of a gap to the upside out of this channel. We saw a little bit of a gap down and a rally in this particular case. So as we start to look at this time frame, this challenge, if I this channel, if I activate that channel and I kind of extend this channel out here, you can see where, whoops, right click, activate, and let's bring that channel out, and we'll reset that channel. So we've got a little bit of a breakout there. This excursion out and back into the channel kind of reinforces that. All right, so now in this particular case, so one of the things that I'm going to think about here is, where is there going to be some effort in terms of institutional investment as well as consumer investment? And it might be in some of these hyperscalers because they become in the forefront of the mind, right? So I'm going to look at going long Amazon in this particular case, but long Amazon when it breaks out of kind of this little bit of a resistance area that it has created. So not yet going long Amazon. And again, this is not a recommendation, but I'm going to create a buy stop, which says stop, wait, buy this. If it breaks up above this resistance level, in this case at we're going to call it 244. So I'm going to right click and I'm going to do a buy custom with stop on this trade. And we're going to do an entry. I'm going to close down this left-hand side so that we can see this a little bit better. But we're going to enter this on a buy stop order above that I'm going to make it just 244. So we're pretty darn close to it right now, but I want to see some effort on this part moving above that level. So I'm going to make it a buy stop that says buy stop, stop. Don't buy this until it breaks above the 244 level. And you say, well, wait a second, why don't we just buy it low? But this is giving us some evidence, some empirical evidence that it's moving higher. Not a guarantee that it's going to stay there. And the other thing that I'm going to do then in this particular case is I'm going to look at stopping this trade out if it moves back into this sideways channel, because if it's going sideways, it's not improving in price. So I want to look at stopping this out below the 237 mark or 237.90 or thereabouts. So I'm going to say, all right, I'm going to make this a stop at 237. I'm going to make this kind of an odd number, 86, right? Not just a big round number. And I'm going to click on good till canceled. And remember, a stop order isn't going to be a guarantee of where that order is going to get filled. So that becomes the area in which this order is likely to get filled if it goes against us. So we're getting out in this particular case. I'm just going to buy 100 shares. I'm going to click on send, confirm and send. I'm going to put this in my stock group so that I've got that in there. And I'm going to read through the order, make sure this is what I want to do. Buy this on a buy stop above 244, sell it on a sell stop if it goes to 237.86 or lower. And I'm going to go ahead and I'm going to click on send here. We're going to fire that order off. Now that order is in place, ready to go in this particular case. All right, so I want to come back and answer a couple of these questions that are rolling through here. By the way, quick reminder, click on that feedback survey as well. Give us your feedback. And the challenge that I gave to you that are in the recorded session, leave us a comment in the comment section. So Andrew Kennedy is asking the question, if there's a foundational error with stock market, the frame rate of different stocks produces candles much too slow. That's not possible, okay? So if a stock max frame rate for candles is 1 minute or 2 minute candles, problematic. Okay, so I think I understand the concept here. If we go back to, or change our time frame, if we go down to, say, for instance, a 1 day, 1 minute chart, right? And we're looking at these candles on a 1 minute chart. These are 1 minute candles. And say, wow, that's too slow to see that information. Is that right? Is that what I'm thinking, Andrew, in this case? If that's not giving us fast enough information, then what do we do from that point? Well, we can always change this time frame. We can change this time frame down to a tick chart. So if we were to make this a tick chart, and we say, all right, let's go to today, and let's make this as fast as, say, for instance, 10 ticks. So a tick is a trade, right? So if we have a trade, this is going to account for a new candle on every 10 transactions that happen. We're going to go ahead and we're going to click on OK. And so we can follow this on a much faster scale. So you scroll down here and you can see how fast those are moving. Now, the problem is the faster the signal that you get, the the more noise there is. So the more noise there is, the more false signals you have. So that is a concern. Now you can see that there's some upward pressure on Amazon here. There are a lot of different ways to do this in terms of that short-term time frame. This is one way to do that. We're almost at our buy stop. Let's see if this hits it right there. It hit it. We're filled. We're in. And there we go. Right? So tick chart doesn't show volume. And you know what? That's okay. Because if it doesn't show volume, volume is an interesting ephemeral issue, right? We don't know if that's buying or selling volume. Price movement is honestly going to be a bigger indication. So we saw a little bit of a pullback. It's now moving to the upside and continuing to move in that direction that we want to go. So, Andrew, I think part of your comment is looking at the index and looking at that information and looking what's weighting those indexes. You know what? That's fine, and you can break down, and that's one of the great things about this market is we can break the market down into a variety of different indexes and different ways to look at that. And in terms of that understanding, you know, there's always different ways to look at the market, right? So as I start to see this type of movement, start to see these types of things, it really, honestly, I think people spend too much time trying to over-optimize and not enough time just looking at what those intermarket relationships are and what those things are that are driving the market. So there were a couple of others that I wanted to look at here really quickly. There were a couple of other spaces in the AI space. That was not necessarily, it wasn't a time frame. It wasn't a 1 second candle. It was a 10 tick candle, right? A 10 tick candle is 10 transactions that took place. So in whatever time frame. All right, so this is HUT. These guys put together that understanding of all of the information. So they take that compute data, they mine through that data, and then they feed that data back out to the hyperscalers. They help those hyperscalers get to the end product, if you will. So HUT moving higher here this morning, and then this one, all of it has to be powered, right? Energy has to be a part of the conversation. We're starting to see Lu Energy as well as others. Oklo is one in this particular space. These energy providers, GEV and others, these are some that bear watching in terms of their impact. Now, one other thing I wanted to do before we go here, as we kind of wrap this up, because we're running down out of time. By the way, and yeah, I think it is. You're right, Wild Goose. But do me a favor, fill out that feedback survey if you wouldn't mind. I'm going to pop over to another grid that I have here. And I use this grid, and I've used this grid in our sector and market and sector analysis discussion, but this is my sector index grid. So I just want to see what's going on with all of these different sectors of the market. I've got a 50-period moving average on there. Energy still moving higher overall. I mean, the energy services companies are going to be moving higher depending on geopolitical issues. Materials moving higher as crude oil comes back down. If we look at industrials also moving a little bit higher. So what I'm going to do, let me pop into one of these really quickly, and we'll just kind of look at these in rotation. So energy bouncing up today, materials bouncing up today. As we look at industrials gaining strength today. Consumer discretionary moving higher today as well. Consumer staples, this is where that rotation perhaps is happening. You notice that consumer staples starting to move back up above its 50-period moving average. Maybe there's a little bit more of a rotation into some of those defensive names. Healthcare moving higher. Financials moving higher a little bit here this morning. Information technology, not so much. So rotation out of tech. Comm services, rotation out of tech. Utilities moving a little bit higher as the market moves, as that bond market moves around, and real estate moving back up a little bit as those rates kind of move back and forth. So there's some interesting stuff going on here. There's some great conversations to be had in the market today and this week as we do this. I know that we've got just a couple of minutes left here. But I want to come back here really quickly. Let's pop back to our single grid. And I know there are a couple of names that are on people's minds. TSLA, Tesla. Whoops, let me pop in here real quick. TSLA, Tesla. And Tesla moving a little bit higher here, but still pulling back off of that bounce down from resistance. Let's take a look at Apple. So Apple coming out of CES. Now CES, the Consumer Electronics Show, is something that Apple typically does not tend to participate in, but they suffer from the impacts of CES when competitors come with new products. So Apple seeing a little bit of a gap down here today. QCOM, Qualcomm, starting to move a little bit higher here. Dell moving a little bit lower on their admission that basically consumers aren't buying AI-dependent laptops yet. So some of those names within this space, GOOGL, whoops, not Dell, Google. Google moving a little bit higher, but selling off a bit, gap up and sell off today. Now, I wanted to look at a couple of other things. NFLX on the ongoing debate regarding the Warner Brothers acquisition, starting to see maybe a little bit of stability here down around this $90 range. Now, with all of that instability that's going on with the streamers, that's beneficial and has been beneficial in the last little bit for Disney as the streamer conversation has been focused there. Disney has made some strides on the back end here to the upside. Now, in that defense segment, BA, Boeing. So the conversation yesterday was defense companies can't buy back stocks, they can't pay dividends, right? That was the conversation. And that brought these defense sector stocks, LMT, down. I mean, big hard move to the downside on LMT. TXT, Textron got hit yesterday as well. Now up today. RTX, Raytheon as well, down yesterday, up today. So then the executive branch comes out and says, hey, we're going to lift the military budget. So that props those defense sector stocks back to the upside. So we see Boeing, which is a defense contractor. Let's be absolutely fair. Starting to see maybe a little bit of strengthening here. And again, on the back of the Alaska Airlines deal, which was their largest order, but they've already got a big backlog anyway. So a lot of things going on, right? When we start to see this movement happening, these are things that you have to pay attention to in terms of that interrelationship. So one of the things that I'm going to suggest, and this is not a recommendation, but this is something maybe as close to a recommendation as I give, and that is this. Come over here to the left-hand side of your chart. Come right down here to Trader TV and start watching the Schwab Network. Schwab Network brought to us by our media affiliate, Charles Schwab Media Productions. I'm a frequent contributor on the Schwab Network. In fact, I host a show on the Schwab Network called Your First Trade. Guys like Kevin Horner, Rachel Dashiell, Barb Armstrong are on the Schwab Network as frequent contributors on the Schwab Network. So if you want to learn these relationships and the influence, the Schwab Network is a great place to pay attention to that, right? So let me do that really quick. My last gift to you, and I would tell you what, I will do this in exchange for you doing two things for me. I'm going to go ahead and I'm going to share this sector index grid. Remember that anytime we share items, those are for illustrative and educational purposes only. When I do this, remember these are not guaranteed as to time or accuracy, but my trade-off for doing this is to very simply click on that feedback survey, give us some feedback information, and click on the subscribe button down there at the bottom of the page if you've not done so already. So in exchange for that grid, my thanks to Barb Armstrong. You can find the Schwab Network at schwabnetwork.com on its own app or here in the thinkorswim platform. My thanks to Barb Armstrong, to Andrew and everybody else that helps to bring this to you, and our great reviewers. Have a great day. Lots of great stuff coming up today. We'll see you here in Dallas tomorrow and Saturday. Take care, everybody. Bye-bye.